Okay, hello guys. Today we are focusing on the MCQs portion. Okay, MCQs, and from the chapter number two. We have thoroughly covered this chapter already, so we will go over 8 MCQs in this video. So let's get started. Okay, the first MCQ here is what does the basic accounting equation represent? How you represent the basic accounting equation? So the answer is asset minus liability and the capital is equal to capital. So that will be your correct option. Okay. Now you see here the accounting equation is defined as an asset minus liability is equal to capital. So means representing the relation between the business asset, liability, and owner equity. And so it's pretty simple. So we have to move fast. Now, what is an asset in the context of accounting equations? It's about the definition of the asset. That what is asset? So asset is actually a resource, and it's controlled by a business, and they are expecting that that will get some future economic benefit from that resource. So the option C is the correct one, right? Now, as a resource controlled by the business due to fast event from its economic benefits or expected flow, such as cash or inventory. Okay, now this is MCQ number third. A business use 200 cash to buy inventory. How does this affect accounting equation? So here is that you have spent 200 cash, means you are spending asset and you are also getting the asset. So what will be the effect on accounting equation? So the asset remain unchanged, capital remain unchanged, and the reason is that asset goes out and the asset goes in, so there will be no change, right? Now here is cash as an asset, decrease the asset by this amount, but inventory again is another asset, and this will also increase your asset by this amount, so the net effect will be unchanged, zero. Let's move on to the next question number 4. What happened to the accounting equation if the owner withdraw 300 cash from the business? So when the owner withdraw, it means withdrawing, and when they are withdrawing the money from the business, then what will happen? The asset will decrease because they are taking the asset, and the capital will also decrease because when the owner taking the money from the business, it will be drawing and drawing decrease the capital. So drawing reduce cash asset by 300 and also reduce capital is the owner withdrawing funds from the business. Okay, now MCQ number 5. A business on $500 cash from sales, so this is getting a revenue. How does this affect accounting equation? So the asset will increase by this amount and capital will also increase by this amount. You know, the business on cash, so the cash is asset. Let me show you here. Income from the sale increases cash, and cash is asset by 500, and increase capital through what? Through by sale revenue. So the equation, the option number A will be the correct one. Okay, a business here, a business incurred, $150 expense. So this means that the expense, increase in expense will be debit and cash form. So your cash will also be reduced. With what will be effect on accounting? So you see here, asset decreased by this amount. Asset decreased by this amount because you incurred some expenses and you have fair cash, and the capital also decreased by this amount. So here you see paying expenses in cash reduce cash, and cash is asset, and decrease capital because due to that expense your profit will be reduced. Here, now what is the effect or the effect of accounting equation if a business sells goods on credit for 400? So when you are selling the goods on credit, it will create a receivable, and receivable is an asset. So here option is asset increased by 400 and capital also increased by 400, and the reason is selling goods on credit increase the receivable because you will get the money in the future, and that will be your asset, and also increase the capital through sale revenue, this one, and that will affect your profit, right? Now let's move on to the question number 8. Here we have a business pay off 600 loan with a cash. How does this affect the equation? So this will if you are paying the loan by cash, it means your asset will be decreased, and the loan is your liability, and if you pay up your liabilities, the liability will also decrease. So option number 1 is correct. Asset decreased by this one, liability decreased by this one, and this is the correct option. So paying off loans, reducing cash and this asset, and reducing loan balance mean liability, and that will be also decreased. Clear? Okay, now what does expanded accounting equation include? So this is very important. You have to remember this. Asset is equal to capital, that income less expenses less drawing plus liability. This is the expanded form of accounting equation. Now if an expense MCQ number 10, if an expense of 250 is incurred on credit, how does this affect accounting equation? Liability increased by this amount because if you expense and that is on credit base, so it will create payable for you, and this will increase your liability, and it will decrease the capital too. Okay, So if you see here, an expense on credit increase accrued liability by this amount, and decrease capital by this amount due to expense reducing the profit. Clear? Now let's move to another topic, MCQs. Which are the following company typically a debit balance and double entry bookkeeping, and that is the drawing. So there are three components that have typically debit balance. The one is drawing, the other is asset and expenses. These are typically debit balance when they are increasing. Clear? Now, if a business has asset of this amount, $50,000, and liability of this one, so what is the capital? And we have the equation that asset liability will be your capital. So the asset is 550,000, liability this one, and you will get how much? 30,000. So the correct option is this one. Clear? Now here, what is the double entry effect when the owner invests this amount in business? So when the owner invests, mean that it will increase the cash amount, and that will be bank debit cash, and credit the capital because capital is also increase. So increase in asset, the owner investment increase asset, and that will be debit. So the bank will be debit, and increase capital. So increase in capital is also credit. Okay, here. Now, a business purchases furniture of this one using cash. What is the double entry effect? So when you are spending money on purchasing the thing using cash, it means that you are reducing the cash, but you are getting the asset that also increase your furniture. So debit furniture by this amount because you're getting, and credit bank or cash by this amount, right? So purchasing furniture increase one asset and that is furniture, and you're spending money, so that will decrease your asset, your bank balance by this amount. Now let's move on to the question number 15. What is the effect of accounting efficient when a business purchases inventory on credit? When you are purchasing inventory on credit, so that will increase your liability, your favor. So what will happen? Your asset will increase because you are getting the inventory, and liability will also increase because you will have to pay in the future. So this means that asset increase by this amount, liability increase by this amount, right? So if you are purchasing on credit, increase asset inventory, and by 500 increase the liability payable by this amount, right? Okay, now here you have another question, that is question number 16. A business in inventory worth this amount for 350 in cash. What is the double entry effect of the sale? So your bank will be debited by this amount because you're getting this amount, you sell it, and your inventory credit sale, the credit sale will be by this amount credit. So this will get the revenue. Okay. Now we have MCQ number 17. What is the profit made per transaction for where dresses worth this amount are sold for this amount? So when you are dressing worth this amount and you are selling it with 300, so definitely you will have 200 profit, right? When you are deducting the selling cost on selling price, you will get a profit. Now 18. What is the double entry effect when inventory worth this amount is sold for this amount? So 200 is the worth of the inventory, you selling that by the 350, so considering inventory adjustment. Now you debit bank by this amount because you are getting the money. Your credit sale also increased by this amount, also effective profit. Now look for a debit cost of sale. The cost of sale we have here, this is the actual cost, and inventory will be also reduced by this amount. So this is the actual entry that you have to know when you are selling the thing at a price of 350 and it's worth this amount. So first you have to do entry or double entry for this because your bank will be debited by this amount and your revenue or sale will increase by this amount. Now on the other hand, the amount issue you face in a numeric account system is the cost of that asset is $200, and you know that inventory will be reduced by this amount because you are now selling that inventory. So the correct option is okay. Now the sale involved double entries. Debit bank. Okay, now we are done with this one. Let's move on to another one. Question number 19. If asset are this amount, $80,000, and capital is this amount, what is the liability? So you have just go straight for the equation, that is asset minus liability, and you will have capital. Now, if you rearrange this thing, then let's move on to here and this one to here. So what you will do, asset minus okay, if you this one will be here, so it will be minus capital, and that will be your liability. So your asset is 80,000, the capital is 500, sorry, 50,000, and definitely the deduction of this one from this one, so you will have this amount and your liability. So the correct option is A, right? Now let's move on to here, question number 20. Which following company typically has a credit balance in double entry? And we have discussed that asset, expense, and drawing have typically debit balance. So the liability, when increasing liability, then this will have credit balance. Clear? Liability along with the capital and income typically have a credit balance and double entry booking as they represent obligation or increase in equity. Okay, this is enough now. We will continue from this one in the next video. Thank you for